Our first half of the year has been pretty good. There's some real highlights. Our premium growth is up almost 10%, which has really been terrific, led really by our assumed reinsurance operations, which had very explosive growth the first half of the year. Commercial lines has been high single digits, as well as the bond operation. And then personal lines is also growing, which is very positive because we've been trying for the last couple of years to get some good growth in personal lines. Very good trends overall on the growth side. On the combined ratio side, we're a little bit above our year-to-date plan, just a little bit over 100 combined ratio. So not an awful result, but something we need to do better on. And we're hoping if the weather stays calm the second half of the year and other things come into play, we can get that combined ratio down more in the 98 range, which is really where our plan is. But we did add over $16 million to surplus. Our surplus is now almost $1.1 billion. So our balance sheet is strong with the $1.1 billion in surplus and our premium, which is just slightly below $1 billion. We project that to be over $1 billion by year end. So pretty good start to the year, and hopefully we'll be able to do even better in the second half. Commercial lines has a combined ratio for the first half of the year just slightly under 100 combined ratio, which is pretty good. However, it is higher than it has been recently. It's higher than planned, so we do need to see some improvement there the second half of the year. However, premium growth has been terrific. We're over 7% premium growth, so that's very good. We also have a couple of new product launches that have gone out. Our cyber risk coverage, which is in 20 states, and then we also have a workers' comp pay-as-you-go program, which is now in all of our states. So a couple of nice product features to go in, good premium growth, a lot of quoting activity, so we're really very bullish on commercial lines. Personal lines had a very good first half of the year, almost at its combined ratio target. Great improvement from the prior year and positive premium growth, which is really terrific. So very good trends in personal lines. And in the states where we have put our new personal auto product, quoting and new business activity is way up. And we were able to add that this year very successfully in Connecticut, New Hampshire, and most recently Maine. And we also intend to launch it later this year in Rhode Island, New York, and Pennsylvania. So very exciting things going on in personal lines. Our bond operation continues to have a very strong results with combined ratio through the first 6 months of about 88, and also very positive growth of about 7%. So a lot of good momentum there. And our assumed reinsurance operation is growing over 30% because we've added some new accounts and we've also taken bigger pieces of existing accounts. The active book on the assumed reinsurance operation is running at about a 97 combined ratio, which is a terrific result, and we think that's just going to continue to get better. Our regional operations in our 5 regions, 3 of them year to date are under 100 combined, led by Florida, which is running at about a 93 combined ratio, higher than it's been, but still very good trends and very positive growth of about 7%. Our New England operation is running at about a 97 combined ratio. It's really our fastest growing region, and both commercial lines and personal lines are growing very, very strong. So we're very excited about things in New England and where we are. Our Northeast region is also doing quite well with a combined ratio of about 99 year to date, and also growing at about 4%, a little bit less than New England and Florida, but still very good growth. Our Southeast region has a combined ratio year to date that's a little bit over 100, a little bit over our plan, and we expect that should improve as the year goes on. However, we're seeing some pretty good growth in both commercial lines and personal lines. 2 of our states in the Southeast, we launched our personal auto product in South Carolina and Virginia last year, and both of those states are doing very well. And we also recently made some changes in North Carolina to our personal auto product, and we're starting to see the results of that with some pretty good growth. So overall, a nice trend in the Southeast, just need to get that combined ratio to continue to improve. Our Western region has also shown some pretty good growth at about 8%. The combined ratio is a little hot right now, but a lot of that has to do with some Midwest storms that hopefully will end this summer, and we'll see some better weather the second half of the year and hopefully see that combined ratio improve. Thanks for the trust that you place in us. Thanks for the business. As we've talked about earlier in the video, we're seeing very good premium growth almost in all of our states. So we really appreciate your business and the trust that you place in us. We want to make sure that we're serving you in a magnificent way. And later this summer, we'll be sending out a survey, an online survey. Please complete that. We would like to make sure that we are doing everything we can to serve you. And if there's things that we need to do better, please tell us. But thanks for your business and enjoy your summer.